Hey guys, welcome back to the channel. If you're new here, I'm going to give you a quick update of the portfolio. I'm also going to go over one of my holdings, Deere and Company, and I'm going to talk about 3M and the future for that in this portfolio. So let's get into it. Over the last couple of weeks, the portfolio has taken some ups and downs. The market was in the middle of a dip right there, and so I would say that was in between um, July 31st and August 14th. And you can see in between that time frame, the lowest point at August 5th was not too low. It didn't bring the overall portfolio down too much. So I can't really complain about the performance and how I can't stress enough how important it is to have the right holdings together. You're going to have some stocks that are going to go up and down and fluctuate quite often in the day, and then you're going to have some that are pretty steady. They might dip or increase here and there, but they pretty much go at a gradual rate up. Okay, so in the short term, you're not really concerned about the overall stock going up and down day to day. You are maybe in a 10-year span to see where it's going to end up in 10 years, 20 years, 30 years. You are concerned about the dividend growth. I mean, primarily about the dividend growth because that is what you're going to see on your balance sheet more often. So having the holdings together in some harmony, if you will, does make a difference. It does make a difference in terms of balancing out some of your weaker holdings that kind of fluctuate. Okay, let's move on. For those that you who watch my channel, you'll know that in the last couple of weeks there is an increase here in the overall value of the portfolio, as well as the number of holdings that I have. And getting right into it, you can see that I've had a rate of return of 4.42%, which is pretty good considering what's been going on in the market recently. And I've had dividend growth of $25.39 overall. Now I'm going to show you what that looks like in the month view, which is still pretty good at $23.64, but that's very misleading because you're not seeing the full picture. What you're seeing is I have holdings that are going to be paying me at the beginning of the month and at the end of the month, and so you're seeing some of the holdings from the previous end of the month. Even when I look at it in the weekly view, you can still see that I've made that $10.98. Now, it's not painting the full picture because it's lopping off a lot of the month that I have earned some dividends, but you can see that I've already passed my initial $10 challenge when I started this channel, and now I'm pushing for the $20 a month challenge, so that's where we're currently at right now. When we look at the three sub-pies, we have the REIT sub-pie, we have the agricultural sub-pie, and we have the consumer sub-pie. Now these three sub-pies have really performed nicely in terms of overall growth, but in terms of my dividends, it's still the REIT pie is my #1 earner. I'm not expecting the other two sub-pies to actually start to contribute just yet. A lot of these holdings that I had picked up, I had just missed the ex-dividend date, so I'm not going to get paid for those in this time frame, in this go-around. I'll get paid a little bit, but I'm not really expecting any payments until the next quarter. In an upcoming video, I am going to go over the other sub-pies in more detail and go over some of the REIT holdings but for now I just want to talk about one of the particular holdings, which is in my agricultural strategy sub-pie. Now I've added Deere and Company because I'm looking for a long-term, steady growing company that I want to add to this portfolio. They have a low dividend yield of under 2%, so that's not something I'm looking for when I consider companies to put in here, but like I said before, sometimes you have to balance everything out. If you're taking on companies that have a high volatility and they're moving up and down, that might have a higher dividend yield, you're going to want something that's going to be able to balance that out over the course of the 10 years and kind of put it on its back and make sure that it's growing steadily. I want my portfolio to grow. I don't want to see this portfolio dipping too much in overall value. I would like to see it maintain its value, but I also care about the dividends. So when I do the percentages for this particular holding, I'm keeping that in mind so that I'm not taking capital away from other high dividend earning stocks. When adding Deere and Company to the portfolio, I really want to consider the long-term play, and I don't necessarily like having under 2% dividend yield holdings for this particular portfolio. However, with that being said, I'm thinking of it in the long term. I'm thinking of it in 10 years out, how that's going to balance out with some of these other higher yielding stocks that are just a little bit more risky for me. So if we look at the overall performance of Deere and Company so far, it's been growing steadily. Yeah, it drops a little bit here and there, but if you can see, the overall arc is in the upward trend. And now this is super important because for me, I'm looking at this as a solid company that's maintaining its equity in order to help out my overall portfolio from dropping too low. Right now, I'm holding less than one share in this position. I'm looking to grow that in the next few weeks and hopefully get it up to at least a decent amount of shares or fractional shares before the next ex-dividend date. And just to reiterate, you're really looking for the dividend income. And so that value is going to be a lot greater than the overall stock price going up and down. The dividends are what really is going to affect your balance sheet, and you don't having these stocks go up and down will not affect your balance sheet until you sell them. So for those of you who don't know this, um, Deere and Company has recently appointed a new CEO. The current COO, John May, has now been elevated to CEO, and the current CEO, Samuel Allen, is now elevated to chairman of the board as of November 4th, 2019. Now, I don't know that much about John May. I've tried to do some research on him and see his vision overall for the company. I'm hoping he keeps it on track to where it is now and slowly just continues to grow the company, not over leveraging it, and pretty much just keeping it boring. So I'm hoping that he's going to be tried and true and steady to the course of this company. I'm hoping he's not going to make too many changes or go in a different direction or try and grow too fast. And anything leading up to his appointment and after, I'm going to be paying attention, really close attention, to seeing what he puts out. Anything audio, anything visual, anything text. I really want to get his mindset because under the current CEO, Mr. Allen, this company has had a very consistent, steady growth, and you can see that in the stock price, and you can see that in his balance sheet. More importantly, their balance sheet shows that they've been earning a really good revenue base at the tune of $899 million currently. So I've noticed a direct correlation between the overall stock value and the amount that they pay out in dividends. Now, this doesn't necessarily have a factor to play. They're not looking at their stock price and saying, okay, let's increase our dividend, but it does reflect consumer confidence and their overall bottom line. Now you're going to want to pay close attention to this because you're going to notice that the overall stock price has increased under Mr. Allen. That since 2010 that the dividend has been increasing at a rapid rate. And I can't help but think that this is due to the guidance of Mr. Allen. So seeing him step down or take a different position in the company as chairman of the board does concern me quite a bit. When looking at the overall stock price, you'll notice that Deere and Company has not really dropped in price, very negligible amount. And even considering what's going on with the tariff wars and different things like that, that this company has still been able to hold a pretty high overall stock price, and that's because their balance sheet is so strong. Because of this, I probably wouldn't have picked it up as soon as I had. I wanted to roll out the agricultural strategy a little bit later on in the development of this portfolio, but this company was not the only one in that sub-pie, and the overall value of that sub-pie had been on a great discount. And I was able to get at least a 5% or more savings for some of those holdings. So I went ahead and I put that sub-pie into the main pie and started growing it out. So even though I put it in the portfolio currently, I'm still hoping that it's going to drop another couple of percent points in order for me to pick up a lot more shares at a better price. Okay, now let's go back to the portfolio. Now I just want to talk about, okay, so now I just want to talk about 3M. Now 3M is a company that I had on my watch list for quite some time now. I'm really considering picking up this company. I wouldn't be surprised if the next update you would see it in the portfolio. As of right now, their dividend is at 3.56%, and so that's looking pretty good to pick up right now to kind of balance out some of the other things that I might pick up, like Deere and Company, that has a lower percentage yield at around under 2%. When considering this company, it hasn't been this low since 2016. So that plays a big factor in my mindset in terms of wanting to pick up this company now before it goes back up in price. This company covers a wide range of things, so that's why I've labeled it in a conglomerate subpie. I wouldn't want to label it to any one industry, and they cover a wide range of things. I see a company like this being very recession resilient, and that's why I'm really considering it for my next upcoming portfolio ad. Okay, guys, if you found this valuable, please give it a like, leave a comment down below. I want to get a conversation going about some of these topics. And don't forget to subscribe to the channel so you get the latest updates. And with that being said, that's going to be it for me. So until next time.